Will business owners pay more tax? This is probably the question I'll be asked most before the 28th of October. And the answer is possibly, but I don't think that this budget will be as simple as saying business taxes going up, because John Healey is also talking very openly about wanting British businesses to invest, grow, make profits and scale. He has said that he wants governments to back people with small businesses and bright ideas, and he wants more private investment coming into Britain. Andy Burnham is also talking about reducing the cost of doing business. And we've already had one significant announcement around business rates. So for pubs, social clubs, and eligible live music venues, they're due an additional 20% reduction in business rates from April 27, with more detail due at the budget. So I think we need to look beyond one question: will corporation tax go up? Because there are lots of other levers that the Chancellor could pull. So tax reliefs, capital allowances, R&D relief, employers' taxes, dividend taxation, business rates and sector-specific levies. There are obviously anti-avoidance rules and potentially the rules around how business owners take their money out of their companies. So it's perfectly possible to have a budget which the government describes as pro-business, while some businesses or business owners still pay more tax. So what about corporation tax? At the moment, I haven't seen anything that makes me think a big headline corporation tax increase is obvious direction of travel. It would sit quite awkwardly alongside Healey telling businesses invest, grow, scale and stay in Britain, but that doesn't mean that corporation was untouchable at all. Reliefs and allowances can change without changing that headline rate as well. And that matters because sometimes the bigger tax change isn't the rate went from 25% to 27%. It's you can't claim that relief anymore. So what about taking money out? So for an owner-managed business, I'd also be watching the relationship between salaries, dividends, pensions, retaining profit inside the company, and ultimately taking money out when the company is sold. Because if dividend taxes, pension rules, capital gains tax or employers' taxes move, the answer to how should I take money out of my company can change too. Now, don't wait till March to think about remuneration. If you own your company, we should be reviewing how you take value out during the year, because the most tax efficient answer isn't automatically small salary, everything else dividends. Sometimes the answer may involve salary, dividends, pension contributions, benefits, or simply leaving more money in the company. And the budget shift could shift that balance again. So yes, some businesses owners will probably pay more tax and some businesses may actually get a little bit more support. And that is why I'll be looking at the whole budget, not just the corporation tax rate. As small businesses, we have notoriously kind of carried those things on our shoulders. And I really hope that that's not something that we see too heavily this time.